The IP market has been pretty hot for some companies, but we have a couple that Francis Gaskins of the IPO Desktop says you should avoid. One of them is Eaton. This is based in Baton Rouge, Louisiana. It has a history of losing money, a convoluted organization structure. So, Francis, why do you think that they're going public?
They're going public to pay off their debt, and they say in the use of proceeds, by the way, we're not using the proceeds, for our business, for the growth of the business. That one actually has a revenue of about $1.7 billion. It's a boring distributor of specialty products to the energy sector, and as you said, it's lost money the last 3 years. It's been growing by acquisition. It's been cobbled together by some private equity people headed by Jefferies Capital. And if you look at their March numbers, their estimates for the March numbers is coming at 23 times earnings, which seems okay, but I don't think it's okay in that particular business. It's coming at 20% of the sales. So they haven't been that successful in terms of putting together companies that have internal growth. And I think they just want to have a vehicle to go and acquire other companies with stock and pay off some of the debt that they incurred to acquire their companies.
Then we have Ares Commercial Real Estate. This is based out of Illinois. Now, this is a REIT, but they only have 4 mortgage loans, and it seems that if you want to get involved with a REIT and buy a REIT stock, there's many more established REITs out there to go with.
Yes, this one is clearly just a company to generate management income for the parent, which is Ares Capital Management. They have about $46 billion in committed capital. It's an alternative investment manager based in Chicago. So what they did is they went out and they got 4 mortgage loans for about $75 or $80 million. They put them in the portfolio. They said, we're going to go get more. And then they're going to take the management fees, to their own companies. And they're selling 83% of the so-called company, on the IPO. And it's not good when companies sell most of themselves on the IPO. So that's just clearly something to benefit Ares Capital Management.
All right, so these are 2 IPOs that everyone should avoid.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to